Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka. The last 5 minutes, we've seen a very sharp slide come through in the market. Of course, it was already turning out to be a no-cheer Friday. But last 5 minutes, the Nifty has taken quite a sharp dive. It's breached that 25,200 mark as well. And in the last 5 minutes, we've seen a 100-point cut on the Nifty. We'll have to wait and see what really happened, but very, very sharp slide come through on the Nifty. In fact, the low point of the day has now shifted to 25,168. Just want to see what is it that is really taking a hit on the chin. Real estate pack is down almost 3% now. Autos down 2%, metals down 2%, FMCG as well 1.5%. Pharma 1.5%. IT that was trading quite steadily throughout the session, even that has given up almost all of its gains. In fact, barely in the green now. So all the gains that the IT stocks were witnessing, that's also been shaved off. In terms of the laggards, just want to take a look at what's really happening. It's some of these heavyweights like Sun Pharma, M&M, Bharti Airtel, Shriram Finance, HDFC Life, all of these stocks are down in excess of 2.5%. Some of these life insurance names are also under pressure. Dr. Reddy's, Ultratech Cement, the list of losers is fairly long today. Just 4 names on the gaining side, and that's HCL Tech and Infosys from the technology end. And surprising to see Trent also in the green today. Apollo Hospital is the other one that's gaining 0.5%. But aside of that, almost a 1.5% cut coming in on the Nifty. We are below the 25,150 mark as well. Mind you, we've broken that crucial range of 25,300 that was being talked about. But not just that, 25,200 has also been taken out. We are just making newer lows, lower lows, so to say, 25,143 at the low point of the day at the current juncture. I mean, it's just exacerbated. And even mid-cap index that had paired some of its opening losses, even that has now slipped to the day's low. In fact, 1.5% cut on the Nifty mid-cap index as well. The banks have already been witnessing a day of sell-off, and right now the Nifty Bank Index is down 800 points. Over 1% cut coming through on the Nifty Bank Index. Mind you, the Nifty Bank Index has been fairly resilient up till now. But today, that end of the market also saw a fair bit of pressure. 60,500 has been taken out on the downside. The breadth of the market 1:2. So nothing really to write home about. It's weakened slightly. And as I mentioned, sectorally, most of them are in the red, and all those heavyweights are in the red. Just 4 names on the Nifty trading in the green. But let's also take a look at some of the movers and shakers from the broader end of the markets. On the losing end, on the Nifty 500 index, you have stocks like Home First. That saw a block deal yesterday. Vishal Mega Mart. That stock is down 7.5 to 8%. There was a block deal in the counter, 14.5% equity exchanged hands. JK Tyre, Angel One, all these capital market plays have taken it on the chin after the NSE CEO commentary, wherein he has advocated for minimum qualifying criteria for F&O participation, and of course that's in an effort to protect lower income investors from losses in the derivative trading segment. But perhaps that means that more action could come through for HFTs. Of course, volumes have already taken a setback on the F&O front, but all these comments not being digested very favorably by the market. The Nifty Capital Index was down in excess of 2%, which is why we are seeing some of these names under pressure, but also the MFI stocks are under pressure. All those small finance bank stocks, and even the likes of L&T Finance, etc. After Bihar passed its MFI bill 2026, much more stringent than what was being anticipated. So yes, the laggards are quite a lot of them, and they're all reacting to news flow as well. On the gaining side, Tejas Networks, this stock has been up and about for the last two sessions. It has gained 31%. Reddington has been, rallying from the word go. Right from the start, it's up 15%. L&T Technology, that's up 7%. Some names like Chennai Petro doing well. Some cable and wire stocks like Finolex Cables doing well. Even EMS names like Dixon Tech are, witnessing buying interest, and even NetWeb is in the green. So all in all, not a great day, turning out to be a freaky Friday now, because we have taken out some very, very crucial levels on the Nifty. Of course, we'll have a technical analyst joining in later on in the show. But to understand what is it really that's leading to this kind of a gloom right now, let's bring on board Anand K. Rathi, who is the co-founder of MIRA Money. Anand, last few sessions we did see a bout of buying coming through, although we didn't really sustain higher levels. But the good point is that we saw FIIs also making a comeback in February, and good buying coming in. Looks like they've turned buyers at least for the month. What is it that's leading to this kind of a gloom? 320-point cut on the index as we speak.
The last few minutes, I don't know what really has happened. Even I'm trying to figure out, is this because of some, thick finger trading, or it's primarily because of some large FI block deal, which is pushing the market down? I still don't know. But broadly, I think India is in a range where, anything about 26,000 looks expensive. And the moment Nifty goes to about 24,500 looks cheap. So we are broadly in that range. So I'm not surprised that it is going down. For all you know, it'll go down, accumulate there for some time, and again go back. So it's waiting for large triggers at this point in time, which I don't really see coming through from most of the sectors, and that could also be the reason why it's getting stabilized, or more or less stabilizing around 25,000, 26,000 levels or so.
Okay, of course, that's been quite a sharp fall. Investors were wrapping their head around the fact that 25,300 was taken out, but look at the kind of dip we've seen since 3 p.m. Last 15 minutes, and sharp cut coming through. What about the Nifty Bank Index? Banks were holding out till now, but today we are seeing a very sharp sell-off come through here as well. Just want to see which are the banks that are actually taking a sharp knock. Kotak, ICICI, HDFC, these are among the top laggards. But would you, look at these dips as buying opportunities for banks at least? Because till now they have really been supporting the market. Does this open up an opportunity to accumulate?
Yes, I think so, because we've been positive on banks constructively for the last 1.5 years now. Any fall could possibly be a good opportunity for you to accumulate banks. They look pretty good. Their credit growth is good. Deposit growth, of course, is a little slow, but I think RBI will come out with measures to help out these banks for on their deposit side. So in my view, largely that if your company, if the sector sees a large dip, I think probably it's a good time to add. But yes, what has also happened is in the last one and about 18 months, what you have seen is a lot of our clients' allocation has swelled up a little, because few banks have had a dream run, PSU banks especially. So in that case, what we are trying to do is move things around inside the banks itself. But primarily, I believe as a sector, banks continue to offer decent value at this point in time, and can have investors can possibly have a sizable allocation in banking and financial services as a space.
What about PSU banks? Because PSU banks have seen a very good run, right? A double-digit kind of gain if you look at the YTD moves as well. Is there more valuation headroom when it comes to PSU banks? Would you prefer private or PSU?
We are still 50-50. We are not clearly in favor of PSU, because we may always run into some kind of regulatory hassle or restriction and per se. So we are not saying that go all out on PSU at this point in time. Do maintain a decent allocation of 50% private, 50% PSU is what I would suggest to a lot of investors out there. And we also believe that PSUs will definitely benefit out of heavy capex spending that is coming through post this budget. So that's one of the reasons why we are positive broadly on all banks, and especially on PSU as well.
Okay. Another pocket from the BFSI space, the microfinance, stocks, they have taken it on the chin after the Bihar MFI bill 2026 that was passed. It was more stringent or similar to the Karnataka ordinance, 2025 ordinance. Now, Bihar constitutes 15% of MFI industry, with share rising by over 100 basis points in the last 2 years. And Bihar's MFI portfolio as well, declined by compound annual growth rate of somewhere around 8% in the last 2 years. The likes of Utkarsh Finance, Small Finance Bank, L&T Finance, Fusion MFI, Ujjivan Small Finance Bank, even Credit Access Grameen, they have a sizable exposure, when it comes to Bihar. Any thoughts on this end of the BFSI segment?
We have never liked microfinance. It's too, it's got way too bad loans and delinquencies to really go ahead and invest in. Of course, I know that you can charge as much of interest rate as you want to, if at all you really have the capability to do so. And with the new bill coming through and saying that, okay, your interest cannot go beyond 100%, Bihar being 15% of the overall MFI allocation, I think, it's time to be a little more cautious. There are regulations coming in. The book also went up through the roof primarily because of rural stress. I think going forward, the book growth also may not be really high, with rural economy possibly expected to come back with a little more rigor and vigor, right? So in our view, MFI is something that you can possibly avoid. Or even if you want to take some picks, I think it's more of a
Okay.
tactical pick. I don't see them as a large allocation pick at this point in time.
Okay, got your point. MFIs, of course, because of all the reasons you mentioned, best avoided at the current juncture. But what about the capital market plays? I mean, brokerage stocks have already taken it on the chin after the RBI rules on bank funding came as a major setback. Now, of course, as I was mentioning earlier, that the NSE CEO has advocated, for what do you call it? More minimum qualifying criteria for FNO participation, which of course hints at more action coming through for HFTs perhaps. But given the kind of correction some of these stocks have seen, does anything excite you within the capital marketplace at all?
In fact, what I think is a little different. I think with NSE, IPO expected to come anytime, there are going to be certain rules laid out so that no, not much of the retail participation and people don't get swayed away by what really has happened in the capital market space in the last few years. And same goes for FNO and derivatives, right? So in my view, this is also in preparation for what NSE India, or which is the largest one of the largest IPOs that will come through next day. So I think in preparation for that. So in my view, I think a lot is good because you can always make sure that there is a proper qualification. Because if a doctor can be qualified, if a financial advisor has to be qualified, so should be a very risky derivative trader in my view. So that's good. And I think one can possibly look at these opportunities to load up on good quality exchanges, good quality companies, capital market companies that I think will benefit over the next few years. Because this financialization will not stop now. A lot more people will get into the markets, buying mutual funds, buying stocks. So this should be possibly used as an opportunity to buy and not really worry about the day-to-day volatility that we see at this point in time.
Okay, opportunity to buy. Okay, two things. We're running out of time, but still, I would ask you nevertheless. What are you currently really looking at in terms of themes? And secondly, would IT feature in the list of that themes? Because the jury is out there. What the AI disruption will really do to IT and IT business moat. But which end of the spectrum are you in? Along with your other themes, how does or where does IT feature in it?
So IT is a troubled water. I used to like IT, and last time when I was here, I recommended an exit, and I think we will not want to fish in the troubled water at this point in time. I may miss about 5%, 10% here and there, which is okay. We do not want to be investing in IT. We are very positive on banking, capital goods. More of a premiumization theme is what we should probably look at. And why India? Stay away from India if you want to go ahead and buy global emerging market funds, not primarily developed markets, but possibly go ahead and buy emerging market is what my larger theme would be.
Okay, got your point. With that, Anand, would like to thank you for taking out time and joining in. Always a pleasure, and look forward to more in future sometime. But have a great rest of the evening and a great weekend as well.
Thank you.
Thanks a lot. Well, let's just take stock of what the markets are doing now, because as I mentioned, it's still where it was at after that sharp plunge at 3 p.m. It's below the 25,200 mark. But we will be touching base with the technical analyst and asking him, now what? Now that that range that people were talking about, 25,200, 25,300, it has been taken out. And if we shut shop below the 25,200 mark, what does it really look like now? What are the levels that one should watch out for next week? Are we headed lower, or could there be some buying at these levels? Our analyst will be a better place to answer that question. But Bank Nifty, 700 point cut, 60,500, that's where it's at, and all the other sectors are trading deep in the red. But just want to recap, on a monthly basis, PSU Bank Index has gained 15%, shining bright this end of the banking lot, BFSI lot, so to say. PSU Banks, the big winner for the month of February. Metals are up a good 8%. Autos are up almost 7.5%. Autos will be in focus on Monday, remember, because over the weekend we'll have the monthly auto sales figures, and of course expectations are that they will remain pretty strong. So autos will be in focus next week. Pharma did well, but IT in the month of February has shed 20%. That's the kind of pain IT has seen in the wake of fears over AI disruption. On a week-to-date basis, though, is the pharma pack that took the lead. 2% up on the pharma pack, 2% up for metal, 1.5% up for PSU banks. Autos also in the green for the week. But for the week, real estate, that's the big culprit, 5% down. IT down 4.5%. FMCG and even the banking pack, the Nifty Bank Index, has shed over 1% for the week. So, not looking all that great. In terms of the individual laggards for the week, Eternal is the big loser, down 9%. Tech Mahindra, Bharti Airtel, Trent, Wipro, ITC, these are among the top laggards for the week. But what really stood out were the likes of Apollo Hospitals, some power and metal names, JSW Steel, Tata Steel, Coal India. These were the winners from the metal index for the week. But the likes of Axis Bank also ended the week on a strong footing. But let's understand, if we have our guest joining in now, Jay Thakkar, Head Derivatives and Quant Research, ICICI Securities. He will be coming to us shortly, and I really want to understand what led to this sharp cut, because we are still around that low point of the day of 25,160 or thereabouts. A 330 point cut on the index. We were anyway grappling with a cut of 200 points right throughout the day, and I don't know what really happened. Suddenly we saw a very, very sharp fall coming in post 3 o'clock, and that's led to the Nifty falling below that 25,200 mark as well. But a lot of these capital market plays are also under pressure. So the likes of Bombay Stock Exchange, the share prices were down 3%. Yes, they are down 3%. Angel One was down 5%. A lot of these capital market names have been under pressure. Aside of that, let's take stock of what else is really happening. GAIL was one stock that was in focus today. Kotak Institutional Equities has in fact flagged off that there are quite a few worries ahead for the stock. Projects a 14% downside from current levels on the stock of GAIL, the brokerage. There is a sell call here, target price of 145 rupees per share, and down just about 0.5% or so. It's recovered from the day's low, but a few issues flagged off by Kotak, and they've said that the company has further cut its marketing profit before tax guidance to 3,500 crores for FY26, FY27. And they've also said that if GAIL were to shut down its cash loss-making petrochemical business, marketing earnings could weaken further. These are some of the issues flagged by Kotak. Aside of that, from the oil and gas pack, even OMCs were in focus today, HPCL by BPCL IOC. Investec has reiterated its sell call on HPCL, BPCL and IOC. Now, it prefers Reliance Industries on the refining upcycle. It says the current valuations of OMCs do not reflect a realistic earnings outlook going forward. So, valuations are expensive, although the companies did well in the third quarter earnings, but still the valuations are much above the long-term averages, which is why it has reiterated its sell call. Some other stocks that were in focus today, Vishal Mega Mart, it deserves mention because the stock was down 8-9%. The stock has been doing well of late in recent times. But today there was a block deal in the counter, almost 14% or above or over 14% equity worth 7,900 crores exchanged hands via block deal. The size of the block deal was increased to 7,500 crores from 3,500 crore rupees earlier. So it was literally doubled. And of course, as I said, 14.5% equity exchanged hands today. I was speaking to capital market, I was speaking to a guest on the capital marketplace. He had a different opinion. There's a lot of concern about more action on HFTs, to protect the interests of FNO traders. But he believes that ahead of the NSE IPO, it could be a good opportunity to spot quality stocks within the capital market basket and pick some of them. But today, Angel One, BSC, all these stocks are down 3 to 4%, 3 to 5%. Given the fact that Ashish Kumar Chauhan, the NSE CEO, advocated for minimum qualifying criteria for FNO participation to protect the lower income investors from losses in derivative tradings. But also a lot of volume buzzers, right? Reddington being one, a 15% uptick here. Tejas Networks, the stock was down, the stock in fact has come down 75% from its highs. Come down to somewhere around 300-400 now. The high is somewhere around 900 or something. But the stock has gained 32% in the last 5 days itself. Aside of that, Finolex Cables also doing pretty okay in today's session. So, aside of that, let's see whether we have the guest joining in or not. I think we're just trying to get him on board. Fine, so it'll take some more time. But let's recap what really happened in the market in the month of February in terms of returns. It's extremely flat. In fact, after the fall that we've seen in the last 15-20 minutes or the last half an hour of trade, we've kind of seen negative returns of some around 0.5%, almost 0.5% on the Nifty for the month of February. Aside of that, some of the best performers, let's take you through some of the best performers of the Nifty for this month. I think it's Power Grid. That stock is up somewhere around 18% and it has clocked its best May since, best month rather, since May of 2009. Max Healthcare and Eicher Motors, they've also clocked in double-digit gains for the month of February. If you talk about the worst performers, of course, no points for guessing. It's from the technology pack. If you look at Tech Mahindra, Infosys, HCL Tech, TCS, Wipro, all of these stocks have clocked in losses anywhere between 15% to 22% for the month of February. That's the kind of pain we've seen. Some experts believe that the worst of the AI disruption may be in the price, but some also feel that another 5 to 10% correction could, is something that may not be ruled out. All these stocks have clocked in their worst months. In fact, for Tech Mahindra, for example, it's clocked in its worst monthly performance since March of 2020. So, multi-year, kind of crash that these stocks have seen. It's been multi-month lows for some of them. But let's take stock of the market close. And, we have shut shop below that 25,200 mark. So, a 310 or 311 point cut on the Nifty. So, the week has ended on a very, very, downbeat note. It was already turning out to be not so cheerful Friday, but it turned into a freaky Friday thanks to the movement, the price movement in the last half an hour of trade. Look at the mid-cap index. It's ended the day I think lower by over a percent. The Bank Nifty down 1%. Look at the sectoral movers as well. IT just about managed to end in the green territory for the day, but real estate, autos, FMCG, metals, all of these segments or the sectors are down in excess of 1.5% or so. And in terms of the top laggards, some of the pharma names, some telecom names, some BFSI names, these are among the laggards. Look at the stock of Bharti Airtel down 2.5%. Adani Enterprises, Maruti Suzuki, Bajaj Finserv and Shriram Finance, these are the two from the BFSI space, NBFC space that are down. Eicher Motors, that's down 2%. Indigo, Ultratech Cement, Adani Ports, Nestle India, all of these stocks are down in trade. Just about 4 gainers for the day. HCL Tech, Trent, Infosys, Apollo Hospital, and the gains aren't too much to write home about. Just about 1% or so on all these 4 counters, but completely collapsed in the last half an hour. The Nifty shut shop below 25,200. But I think with that, I think we should call it a day, because not sure whether we'll have the guest joining or not. But yes, not a very good close. Not that after the kind of traction we saw over the last couple of sessions, one wouldn't have thought that we will close the week below that 25,200 mark. So very, very disappointing, so to say. It seemed like we are taking things into stride. FIIs were coming back. We saw some green on the screen, even though we couldn't really sustain those 25,600 levels. But from those 25,650 high swing highs of the week, we've really shaved off 450 points or so, and we've ended below 25,200. So not great, but that's how the screen is looking. Not very encouraging. But I think with that we've come to the end of this edition of Closing Bell. Of course, I've already said my goodbyes to the audience of Opening Bell, but for the audience of Closing Bell, thanks a lot for being a part of my journey in Moneycontrol. This is my last show here. From the bottom of my heart, I would like to thank all of you for your support and for the kind words that you've had for me over the years. But of course, the action in Moneycontrol continues, so you stay tuned to us, and of course, stay tuned to Moneycontrol for all your other news and updates. And keep watching us as we bring you more and more news and views on markets and investments. Thank you for watching. Have a great weekend and enjoy. Thank you.